You're listening to the WBT Podcast with Michael Lodge. Listen to all of our podcasts at www.wbtpod.com. Stay informed. Let's get started.
So I got up this morning, looked at the temperature outside, and it was 34 degrees here in South Carolina. And so I let my dogs out, and it seems as though that my dogs, being outside in that fresh air, has a tremendous amount of energy. So I'm going to play music over my talking today because I don't know if Buddy, Zoe, and Skippy are going to start barking or not. And I'm not going to fight the dogs. I tell you, when they begin barking, or somebody knocks at the door, they go crazy. And so I'm not going to fight it anymore. And so today we're just going to play music in the background so you don't hear what's really happening with those dogs. But I wanted to go over some tax planning tips that might be able to help you. Now, I'm going to preface this statement by telling you that I don't know what Congress is going to do, so I can't even advise you at the moment on potential tax law. All that I can do today is advise you on what you can do today under the current tax code. I don't know if Congress is going to do retroactive tax reform that will affect 2017. I went to a 2-day conference this week, and that's basically what the IRS said. They didn't know what was going to happen. They didn't even know when tax season was going to officially begin. So I can't really tell you what's going to happen under tax reform because no one knows. It's still in the Congress, it's still in the Senate, and now the Senate is having some senators that don't want to support. I mean, it's crazy. So we don't know what's going to happen, or if it will even happen at all. But let's talk about what is currently under the current tax code that you can do. And one of them is prepaying your deductible expenditures. In other words, looking at everything that you can pay in advance of 2018 that you can take on your 2017 tax return. So if you itemize deductions, accelerating deductible expenditures into 2017 produce higher tax write-offs, which really makes sense if you expect to be in the same or lower tax bracket last year. If you turn out to be in a lower bracket next year, more likely if tax reform happens, then we will have to talk about other things, but we don't know what they're going to do at the moment. So what you can do is, for your January house payment, accelerating the house payment that is due in January will give you 13 months worth of deductible interest in 2017, unless you've already been following the prepayment drill, in which case you need to keep it up to have 12 months worth of interest deductions for this year's returns. You can use the same strategy even with a vacation home. Okay, so if you have a vacation home, you can use the same strategy of prepaying the January house payment, unless you're automatically paying in more to cut down your payment strategy for the remainder of the life of that house. But for this year, if you're just making the regular payments, you can make that January house payment in December and have more interest tax write-off for yourself. Then on the state and local taxes, which of course is being eliminated in the congressional tax reform plan, so we're going to talk about current law at the moment. Prepaying state and local income and property taxes that are due early next year can reduce your 2017 federal income tax bill, because your total itemized deductions will be that much higher. And then on your medical expenses and miscellaneous deduction items, consider prepaying expenses that are subject to deduction limits based on your adjusted gross income, AGI. AGI is the number at the bottom of page 1 of your tax return. Okay, so if you look at your 1040, go to the bottom last line, and that's your adjusted gross income, or AGI for short. It includes all the taxable income items and a few write-offs, such as the ones for alimony paid and moving expenses. The 2 prime AGI sensitive candidates for the prepayment strategy are medical expenses and miscellaneous itemized deductions. So under current law, under the current tax code, medical expenses are deductible only to the extent they exceed 10% of AGI. So take the 10% of your AGI. If your medical expenses don't go over that number, you can't do it, okay? So loading up on elective procedures, dental care, glasses, in contacts, or whatever medical expenses that you can prepay before the end year could get you over the 10% of AGI hurdle and result in a meaningful medical expense deduction. So think about that just a little bit. Miscellaneous deductions for investment expenses, job hunting expenses, fees for tax preparation, and advice, and unreimbursed employee business expenses count only to the extent they exceed 2% of AGI. If you can bunch these kinds of expenditures into a single calendar year, you'll have a fighting chance of clearing the 2% of AGI hurdle and getting some tax savings. So we're going to put out a warning there on prepaying on prepaying. So the prepayment strategy can backfire if you will owe the alternative minimum tax, AMT, for this year. That's because write-offs for state and local taxes are completely disallowed under the AMT rules, and so are most miscellaneous itemized deductions. So if you did AMT, this isn't going to help you very much. So prepaying these expenses may do little or no tax savings, good for AMT victims. Solution. Ask your tax advisor or your tax accountant if you're in the AMT mode before prepaying state and local taxes or miscellaneous deductions items for 2017. The good news, both the House and Senate tax reform bills would eliminate the AMT for 2018 and beyond. So let's cross our fingers that happens, because that AMT really screws a lot of people up. So, whether it's a possibility of the tax reform, what's in there? For 2018 and beyond, the House GOP tax reform bill would eliminate itemized deductions except those for home mortgage interest, subject to a lower debt limit for new homes and deductions for only one residence. Charitable contributions and state and local property taxes subject to a $10,000 limit, for $5,000 for those who are married filing separate on your tax return. Foreign real property taxes would be non-deductible. State and local income taxes would be non-deductible. So if we look at the Senate GOP tax reform bill, would eliminate itemized deductions except those for home mortgage interest, with no deduction allowed for home equity loans. Charitable contributions, medical expenses, and personal casualty losses in federally declared disaster areas. Deductions for state and local income and property taxes and foreign property taxes would be completely eliminated. So you have to look at that. Under the House bill, the principal resident loans taken out after November 2, 2017, you would only deduct interest on up to $500,000 of mortgage debt. So there's a lot of differences between these bills, okay? But you need to look at your tax strategy, see if you can do some prepayment on some of your home things and everything else. But please, call your tax accountant, get that AGI number so that you know what medical deductions might be allowed and miscellaneous deductions might be allowed, okay? If it's not going to help you, don't even go there, okay? But anyway, so there are some strategies that you can take. And think about it. Talk to your tax accountant. See if he doesn't or she doesn't have any other further ideas for you to help you on your 2017 tax return. Now, if Congress does their job, which we're crossing our fingers that they do, and if they retroactively go back to 2017 on their tax reform items, then we have another discussion that we will have to take. But we don't know what's going to happen. In fact, I believe today Congress will vote on their package, and then it will go into conference, and they'll begin marking it up and doing changes. So we don't even know it as of this time what's going to happen, which is hard for us tax practitioners because we don't know what to tell our clients except that you have to go right now off of the current tax code because tax reform has not come as of yet. So stay tuned. I'll try and keep you as informed as I possibly can on what Congress is doing. You will notice that I do a lot of podcasts telling Congress, hey, do your job. And I don't think they're listening very well because even today, there are some senators that are not going to vote for the Senate version. So we are up in the air. I mean, if you really think about it, Congress really screws things up because there are so many divisions within Congress and the Senate, and some make their decisions based purely on political issues, and then others make their decisions on what is best for the nation. Tax reform is needed because we haven't had tax reform in a very, very long time. Taxes keep going up, 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 up. More red tape, more regulations, more tax codes, 74,000 pages of the tax code out there that no one will ever read the full thing. I think there's more pages in the tax code than there are in the Bible. You'll do better reading the Bible. So we have an issue with Congress of not really doing their job. They're not really doing tax reform. They need to do away with all of the deductions because tax deductions on your tax return opens you up for audit, and that gives too much work for the IRS to do. Just way too much work. And I don't think it's fair that Americans get these letters that say they're being audited on things that they were told that they could deduct. And so they did itemize deductions, and now they're being audited. So we need to simplify this tax code so that the IRS is not so involved in our lives 12 months out of the year and for the rest of our life. So we need really good tax reform. We need lower rates. We don't need 7 like it's in the Senate version. What we need are 4, and we need to remove the deductions, and we need to simplify how we file our tax returns. I know it's going to get me out of work. I don't care. That's fine because it's best for the United States. It's best for you and me. So that's it for right now. I'll keep you informed if anything happens on tax reform. But I'm still going to keep fighting the Senate and the Congress to please do their job and do what's right for America and stop the politics. This is Mike Lodge. I will talk with you soon.
This is brought to you by Lodge & Co., a business and tax advisory firm where your success is our goal. Call us today toll-free at 888-681-1518 or visit us at www.lodge-co.com and learn more about what we can do for you. Lodge & Co., your source for sound business and tax services.
Thank you for listening to the WBT with Michael Lodge. Join us again tomorrow as we explore more about business and taxes. Follow us on iHeartRadio and go to our podcast website at www.wbtpod.com and listen to all of our podcasts and read our blogs.